folks. So remember the ground rules. Number one, be kind. Number two, keep to the topic. Number three, no political discussions whatsoever. And also, please, please keep the side conversations to a minimum so that the rest of us can focus on the education and information that Roger's going to be sharing, because he's here to give us an edge and to help us all become more confident and consistent in our trading activities. Now, for those of you that were with us this morning during Roger's 8 o'clock pre-market show, and he does this every morning, folks, at 8 a.m. Eastern Time. He starts off by talking about what's happening with small caps. And the three small caps he gave us today were DWTX, RDHL, and SCOR. And looking at each one of these, nothing that I see really giving us an opportunity in the market, but I will note this. Initially, Roger gave us SCOR as a level as $8.80, but it actually reached $10.80 in pre-market before the market did open. A couple other things I want to mention to you folks is that Roger's selection process is not only based on price action, but is really, really focused on extreme volume in the pre-market for these small caps. He also suggests that never take these trades unless it's in the normal market hours. And if you don't see an entry by 2 p.m. Eastern Time, just forget about the trade and move on. And also, if you are in one of these small cap trades, never hold these trades overnight. They do not react normally to the kinds of things that we see focusing on large caps. There's no institutional money in these trades whatsoever. It's all retail traders. And we expect, or Roger expects, if there's going to be an opportunity here, that it's going to happen shortly after the market opens, kind of hit that pre-market level, move it a little bit higher, take some profit, and then it just as quickly can fall right off the cliff. Now, as far as today's catalysts for the markets are concerned, there were a few that Roger said we needed to be aware of. Number one, we have several FOMC members that are speaking during the day. We had home sales data come out, which was actually a little bit more robust than had planned, and the Dallas Manufacturing Index came in a little less than expected. We also, Roger suggested that we keep a close eye on chip sector because LRCX came into the market up 3%. In the consumer discretionary sector, we saw that Carnival Cruise Lines was down about 3%. And then there's weed. We saw that two fairly large, cannabis stocks were up. CGC was up 20%, CRON was up 10%, and this was all stimulated by Trump's comments yesterday, basically touting the medical benefits of cannabis, and there was a resulting action here in the markets. Now, as far as today's pre-market stock watch list was concerned, there were several shorts and longs that Roger had mentioned to us. And in each one of these cases, he brought up the associated chart so we could see where these things stood. On the longs, you'll note that there's an asterisk by CVS, ABBV, TEL, and GL, and that's because each one of those four was setting up nicely as an A line. And Roger was going to make sure that Matt was on board with these things in the event that there was a trade that we wanted to take in our A-line group. So these were the pre-market stock list. And once again, I also want to caveat things this way, and that is that Roger suggests that if you're looking at any of these as a short or any of these as a long, just make sure that you've got a crystal clear breakout or breakdown before entering into these trades. And finally, as Roger basically closed the session, here were his closing comments. Generally speaking, he liked what he saw in the market and was cautiously optimistic. He noted that the QQQ, the QQQE, the MAGs, the SPY bonds were all up pre-market. But he said, it is a Monday. Okay, and there really is no directional bias in the market. And he said for those of us that are involved in stocks that are gapping up significantly, now would be a great time to take profit on those stocks. His concern here, once again, is that we could see just a little bit of a pullback in the market. That's something he expects. He was expecting to see bonds and the SPY retrace, back to support levels and consolidate. And he'd hate for people to miss, opportunities to take profits on stocks that had already gapped up. He also suggested for us that as far as news was concerned, the focus in the markets would be on reports coming out on Wednesday. We had the ADP report in the ISM manufacturing, and then this Friday, we're going to see the monthly jobs reports and the ISM services data come out. So those are the two big days as far as Fed data and news is concerned, and the market clearly had his eyes on that. So once again, for those of you that are joining us, Roger's got a great agenda planned today. We know for those of you that were with us yesterday on Sunday, we had a major announcement around enhancements that have been made to the data miner software. And all this week during the VIP session, Roger's going to be focusing on these features, their capabilities, and how you can use them to trade the markets. He and Matt are going to look to do a walkthrough on what these key features are. He's going to have a pretty interesting discussion on the time spread module and how to take advantage of that. Also, very, very proud of the correlation module that's been put together and the time frame to use. And on top of all that, he announced all these fantastic features, and he said, oh, by the way, I've already got some pretty interesting stuff in the middle that I want to get to work on right away, because this is something that he plans to enhance and continue to grow, down the road. So anyway, that's what today's agenda is. And if you have any questions during Roger's presentation, remember, folks, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, remember, folks, that the chat is open to everyone, and we do have some ground rules. Be kind. Keep to the topic, no political discussions. Keep your side conversations to a minimum, folks. Please do that, because we want to make sure that the rest of us have the opportunity to focus on the education and the information that Roger's sharing, because as we know, folks, he's here. The only reason he's here is to give us an edge and to help us become more confident and consistent in our trading activity. So once again, Roger's going to be joining us here any moment, and today's focus, as I mentioned, is going to be on the new and enhanced data miner, walk through what those key new features are, discussions on the time spread module, talk about correlation and time frame to use, and some of the other key features that he has. All that's going to be covered. A couple other things. I see some comments here in the chat panel. First of all, welcome to everybody that's here. We've got a ton of people that are coming in. And I see a number of comments here about the data mining software. That software right now is currently being tested. In other words, the modules are essentially done. And as Roger said yesterday, his discussion yesterday and discussions today, etc., are going to be about a pre-release. This is getting tested right now, and it is going to be released very, very shortly. And I know he's going to cover that with you, but I see several people going like, hey, I don't see this yet, in my one-click area. No worries, folks. It's being worked on, and it's going to be coming to us. So once again, thank you so much for coming today. I know that Roger's joining us here right now in the room. We've got a great agenda that's planned for today. I know Roger's enthusiastic. I tell you what, I was pretty much blown away, by what I saw yesterday with all the enhancements. And so with that, I'd like to welcome Roger to the room. Also want to say hi to Matt. Matt, it's great to see you, buddy. Hope you had a nice weekend. And man, here we are. Roger, we're ready to roll our sleeves up and get at it. It was interesting. I when I think about some of your closing comments, your thought was, hey, folks, if you've got any stocks that are gapping up, now would be a nice time to take some profit, because you fully expect that the SPY and the bonds were going to kind of pull back to some recent support and then consolidate. And I'll be doggone, Roger, that's exactly what it looks like they've done. Roger, I think you might be on mute, buddy. Roger, if you can hear me, I think your microphone might be muted.
He's working on it.
Oh, I got you. Okay. Well, Matt, you sound great. All right here. So just a little technical issue here. Matt and Roger are going to get this sorted out, get his microphone, but we see him crystal clear. I like to see that palm tree waving in the background. And da, 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 da. Yeah, we'll get it worked out. Sometimes just a little reboot's all that's necessary.
Be over here. Test, anything? Test.
Oh yes, there you go, buddy.
Oh,
There you go.
you could hear me now.
Yes, I can hear you
Oh,
perfectly.
okay. Matt, we're gonna have to change this cord. Okay, we're gonna have to change this cord.
Little flakiness in the cable. Yeah.
Yeah, there's something going on in the cable because this is the second or third time I adjust it over the last few days, and something happened. So I'm definitely gonna need a new
Are
cord.
there teeth or claw marks on the cable?
No teeth, no claw marks, but I guess we've been using it for a while, and cables.
it
Well,
happens.
you know how it goes. But yeah, thanks, Matt. I appreciate it. But I guess it looks like yeah. Anyway, good morning, everybody. I was able to hear everything you were saying. Obviously, it's just it's this thing here, and
Yeah.
am I coming through loud and clear right now?
Yes, you are. Perfect.
Okay. Okay. Great. I guess I won't touch this cable, but definitely, Matt. Let's get a monster cable replacement for it. Okay.
Yep.
Okay. Yeah, I do have good teeth, and they're pretty sharp. Okay, so there are absolutely. I don't know if you guys were watching my show this morning, or if you guys were tuning in, but and good morning, everybody on YouTube. We got Kevin, Richard, Diana, Afa Diaz. And here we have, let me just say hello to everybody, and then we'll start. We got John, Tim, Sandra. We got Don, Andrew, Hopium. We got Armin. We got Bugs. Good morning, Bugs. Matt. We got Doug, Tammy, Claude. Hey, Claude. Peter, how are you? Penny, good to see you. Opiumatic, Robert, Michael, Doug, Gitano, Penny, Stacy, Tammy, Robert, Michael, Helen, Cyrus, RP, Alan, and I'm just scrolling, folks. If I miss you, I'm not doing it on purpose. Please do not take it in any way. I also have a backup mic here with a good cable, so or two. So I'm not really concerned. I would have switched over if we weren't able to get it to work. So you don't have to worry about that. All right, Wesley, Kirk, Vladimir, Kevin, Maggie, Dr. Mike, Christopher, Jason, Barry, Peanut, Susan, Raindog, Kurt, Karen, James, Robert, and Rick. Good morning, everybody. Good morning and good afternoon, and welcome. Yeah, Clyde. And if it doesn't work in the future, we're just going to blame Clyde. How about that?
I think that's appropriate.
Exactly. Now, I should be sharing my screen, right? I should have a couple of... Okay.
Yeah.
So, and you could see right here on... where is it? Where did it go? I just had it here a second ago. 1 second. Here it is. There it is. Don't run away from me, spy. Okay. And you could see right here, we opened up. We had a gap up. We went sideways. We tried to the bulls tried to give us a false move, and then we came right back down, and we're almost. I'd like to see us a little lower, so I actually think we can go a little lower here. And again, why was I thinking all this? I explained it. I took an hour to explain it this morning, so I don't want to explain it again. But in a nutshell, it's this right here. I actually said I really like what I'm seeing, and I'm not bearish. What I said is that I think this is the opening was too much too soon based on market internals, based on the bond market, and based on a couple of other things, and that this needs to touch the 8-day or at least cool off a little bit, and the high is not going to be where we're at, and we need to come down here. And odds are we'll probably come down somewhere right over here with the wick, maybe tomorrow, if not later today, touching right here, making 3 higher highs, and this will look very nice. But right now, this is what we expected. On a Monday after a couple of good run days, to have a strong, it's just not, it's not in the cards. Now think about this. Everybody who didn't listen to me this morning and got in here or said, he doesn't know what he's... Remember I said first half hour,
Yep.
profit taking only, and I wrote it in the Telegram channel, and I warned you and I gave you levels and I pretty much like screamed at the top of the Empire State Building and rented a billboard, a digital billboard.
Don't do
I'm
it.
well, something about me, one thing about me, Raleigh, you never have to think what I'm thinking. I'm very descriptive and I'm very direct and I'm very straightforward and I don't mince words. And that's what I was saying. I said we're going to gap up this morning, but unfortunately we're running a little too hot based on where we're at from the 8 day, and we need to cool off. It's all that. That's all I said. And I still really like the market here. I don't have a problem. I don't have a problem with this market. I'm in the short term, it's a little too much too fast. Now, if it was Wednesday morning, if ADD, and look at ADD, look at Tick. Tick just made an all new low on the day, which probably means we're going to go lower. And ADD, and here was the big giveaway. As soon as the market opened, ADD went from positive 1200, literally as soon as the market opened, negative 141, which means we went from a gap up to pretty much where we closed on Friday.
Right.
And since then, look what's happened. I mean, look at this. Nothing, just coming off. So market internals have only been going down since the market has opened. They have not been going anywhere else. They've been going down. Also, look how hard and fast we came here from the non-value area, and this is the value area right here. And we bounced up, and now we're here. But this is the 5-day price level right here. We're now a little bit above the value area. So this is more of like kind of where I think we should be, which would again put us right where we closed on Friday.
On Friday.
Right here. Any way you cut it or slice it or dice it, I think we're going right back to this range right here. And by the way, we're not very far away. We're a point and a half away. So let's not, it's not like I'm predicting the end of tomorrow. Liberty says, you just nailed the downturn, Roger. I shorted the SPY and took $19,000. Huge thanks. You're welcome, Liberty. Very happy to help. And I'll tell you something else. What percentage of how long have you been helping us out every day, like literally focusing most of your time for us, Raleigh? About 6 weeks?
Yeah, about 6 weeks. Yep.
How wrong have we been on the daily movement and what not that often?
No, I mean, Roger, not that as a matter of fact, not that I can think of it all. I'm just more impressed with, your ability to basically get a sense of what's going on. But there's no secret. You share with us your process, the tools that you use, and it's just, it's rinse and repeat. A black swan or something like that could happen, Roger. We all know that, But outside of that, you're right on point. And look at this, Liberty, 19K shorting the futures market. Wow.
That's very nice. Very nice. Very nice. I'm glad you paid attention. Okay. So we had a fantastic session yesterday. I know a lot of you guys, it has infinitely. Good to see you. Good to see you. It's good to see everybody. It's good to see everybody here. We had a real fun session yesterday. We launched or pre-launched the all new data miner software. And this software, as I explained, we launched the version, and I'll talk quite a bit about data miner later, but first I want to talk about stocks and some goodies. But I just want to say this. We're going from data miner 1.0 to literally data miner 10.0.
Yeah, one jump.
Okay. And so please give us a little time. We're getting it all worked out literally right now in real time. Like the developer is working with us in real time. So as soon as Matt and I say this, he puts all that. So I'm going to break down some of the cool things that are going in for you, because I know a lot of you were in church yesterday. I probably got, Raleigh, I'm not exaggerating, I probably got about 50 emails last week saying, hey, I'm just not going to be able to be here on Sunday because it's Sunday. And I understand. Also, to be fair, when we launched it yesterday at 1 o'clock, it was only 10 o'clock in the morning on Sunday on the West Coast. So, a lot of people missed it. So I'm gonna show it to you again today. But I want to first. So here's my agenda. I want to go through some stocks. I want to go through all the cool new features that we're putting into Data Miner, and more importantly, how useful they are and what we do with them. I showed everybody this morning something, and I really want you to see this, because I remember the first time I saw this, this was very overwhelming for me, and I was a little scared. So the first time I ever went to Stock Fetcher, which was first time I ever went to Stock Fetcher, and I before I even logged in, I went down. I was looking around, and I go right here, right now. Imagine something. Imagine you just know enough to be dangerous to yourself. Just imagine you're there, okay? I got you infinitely. I got you. He finally subscribed to me on Twitter. No joke. I'm talking to infinitely on YouTube. I haven't seen you in a while. Okay. So first time I came here, and I imagine you guys go through the same things I went through when I was starting out. This program has been around for a very long time. So I remember the first time I came here and I looked here, I was like, oh my God, in order for me to be a real profitable trader, I have to learn all this stuff, and I have to know what all this means, and I have to use all this stuff. And 30 years later, I'm going to tell you, I don't use any of these things. I literally use like 2 tools that I literally created myself. Like, don't think just because something has, that's why I see a lot of folks buying tools. Wow, Roger, it's got 200 technical indicators, and it lights yellow, and it's got the green light. And my question to you is, but can it do this? And you're like, I don't think so. Then what's the point of having it? So the only thing I put into this data miner are things that I actually need more than anything itself, and that nobody else provides. Now, don't you think that's ironic? If I need these things so badly for myself, why wouldn't other people market them? Isn't that a good question?
That's a damn good question.
I mean, think about this. I've been doing this for 31 years, and I'm telling you, like, in order for me to do time spreads, I need 2 pieces of data. I can't get that data anywhere. Why wouldn't other people need that data? And then when I explain the data to somebody, people are like, you're telling me you can't get that anywhere? Yeah, that's exactly what I'm telling you. So it's a big difference between buying something that has a lot of things like this that are completely useless, and buying something that only has things that I rely on every single day. Okay? Every single day. All right? I'll catch up to you in a bit, infinitely. I appreciate it. I'm glad you're here. So anyhow, please, whenever you buy something or somebody shows you something, ask them, well, how do you use this? And more importantly, what is the benefit of you using this? See, that's what I want to know. I start in the end. So if somebody tells me like, hey, I use this support and resistance area and I have a 95% profit over 300 trades, I'm going to start using this support and resistance area. Till you tell me that, this is useless to me. And I'm not picking on Stock Fetcher, and I'm not picking on support and resistance. I'm trying to illustrate a point that a lot of you know enough to be dangerous, and you're falling down, and you try to grab onto every branch, thinking it's going to hold you, but they just make you fall faster. So I just want you to be aware of that. Okay. So now let me go through the stocks that are on my watch list. As I said previously, I actually really like the market. Michael, we'll go through all of that today. I promise you. I'm not going to leave you hanging. And more importantly, even if I don't tell you what they are, we're putting them into data miner. And I'll be going over that in the class on data miner in about 25 minutes, half an hour. I promise you will not miss anything today. Everything will be unmasked, completely unmasked. All right. So let me give you the stocks that I like, and then we'll go through data miner. Where's my TC2000? Turn it on here. All right, there we go. Okay. So as I was saying, I really like a lot of stocks right now, and the problem is this, and it's the same problem as I told you about in the bond market. Now, but the bond market was able to get it back up. So if you may or may not remember, You may or may not remember. This morning I said that we need to make sure the bonds get out of this box above this area. And I said it, and I even have this area for you on here. Let me show you. If you don't remember, here's what I did. I showed it to you right here. The red line I drew is still there. So see it right there. Mary wrote it down. Thank you, Mary. Yep, right. 89.50. Thank you, Mary. I appreciate that. So, and I said something really important. This is really important because the bond market's going to determine if stocks are going to go up. So what I said if we can break here, let me that if we can break out of this range back up, the odds are that stocks will break back up. But the bond market wasn't up here yet. It was just right here at this red line. And I said, I don't like how we're going down, but if we break up overnight, we broke up overnight. But in the morning, we were kind of going down. And I said, we already made a higher high. If we break out here, this is going to be very, very important. And we did break out here. And remember, the day's not over yet. And I didn't say I'm expecting a big down day. I was very clear what I said. Gap up in the morning, consolidation, a drift down to fill the gap, and then possibly coming back up after we consolidate at the end of the day. Exactly what I said. Nothing different. There's at least 300 people that were listening to every word that I was saying, and that's exactly what I said, like 10 times. So you see how the bond market on a daily chart was able to get into this area? Trust me, this is really important. Look. See how I was able to get into this area? I did. I said that. See that? So we're looking at this right now. This is exactly what we're looking at. And I still have it here at 89.49, which is exactly as Mary said. So now let me switch to the SPY. Now you see the SPY is completely above the 8-day EMA. It's in the gap. This is good. This is what I want to see. But what I said this morning was very clear. We opened up and the meat of the move was right here. And I said, this is a little too much too fast away from the 8-day. And what I would like to see is this little wick right here come down, clip the 8-day EMA, make a nice little trend line right here, higher into right here, make a nice little trend line. Here. I'll even give you right here. So this would come right here. We would be able to make a nice little ascending triangle here. And this starts coming back up and breaking this. And if we even go one step further and put a VWAP there, you could, right there at the swing high, that's the swing high, you could see we're already above it. So theoretically, all we really need is this pullback is to come down right here. Right here. And we're here. I mean, we came here, and all I wanted for Christmas was for us to come down here. That's all I wanted. I just wanted us to fill the gap. So I still think we have some more to the downside. And again, I don't think we're going to break down. None of that stuff. I just didn't think there was absolutely any need to buy on a Monday morning on a strong gap up when the bond market was not certain. And I just don't think there's a need. And now I'm going to start getting bullish again if we go above 664. But there was absolutely, if anybody bought pretty much anything this morning, it would look like the SPY right now. You would have gotten really excited right here. You would have bought. And what did I say? I say liquidate. Morning first half hour liquidation mode only. I wrote it on Telegram channel right here. And by the way, everything we've been talking about right now, look, this is 10 o'clock in the morning. Do you see the arrow? The nice big arrow I point?
Right. Yeah.
Here. How about right here? What I was just seeing, too much too fast is what I'm trying to say. Nothing really sticking out to the upside. Internals are moving slightly lower, not super strong, but are not weak either. I wouldn't be surprised if we started poking into the gap, as per my analysis this morning, like what I'm seeing, just too much too fast is what I'm trying to say. Exactly, and this is a 9:53 in the morning. So you can't say I'm playing the old Monday quarterback. Okay, so Where does that leave us? Well, what that leaves us is it leaves us with a bunch of stocks that are now above the 8-day EMA, and I'm doing this right now. I'm liking them a lot. Again, I just don't think the timing is perfect, but I like what I'm seeing. So let me give you some shorts first, and then we'll get some longs. And any stock that's breaking down today on a move like this in the market, especially if it's been breaking down like this daily chart right here, the daily right here. This is the 5-minute. They look fantastic. That's a pretty good short. Starting to get just a little over, not too overextended, just a little overextended, but still looks good. So that's Kava. Let me go to the next one. 4. Second one. Hey, Cyrus, good to see you. Good to see you here. Got Play. I know a lot of folks have been making money on this stock. We've been calling this stock in the morning and in the afternoon now for quite some time. Dave and Buster's, nice stock. BJ, Costco may be joining BJ's pretty soon too. And I think, correct me if I'm wrong, but I think we have a supermarket or something reporting today. I mean, this week, not today, but this week. I may be wrong. And BWIN, very nice stock, not overextended yet. Very nice stock. And I gave you this morning a bonus in the pit. I gave you Target right off the 8. It doesn't fit the criteria, so I gave it to you as a bonus trade. And I still really like it, simply because I think it's going to continue grinding down here. That was a bonus trade. I'm doing well, Art. Thank you. So now let's look at the longs and notice something interesting about these longs. A-line. Perfect A-line, isn't it? Look at that. Matt, look at this. BE. Nice A-line, isn't it? Yeah. Crossing right above. Just needs a confirmation right there. And look at WDC. This is overextended. This is a little too overextended, but still nice move up. Very nice chart, just overextended. Google. Again, if the market comes back today, we have an A-line. This is kind of what I'm expecting the SPY to look like. Look at the SPY right now. See that? And look at Google. I'm expecting the SPY to look like that before coming to the 8-day like this and then coming back up. And that's all I'm waiting for. And if Google comes up and closes strong, or at least gets above the VWAP today at some point in the day, and I think it will, that'll be a very nice A-line trade. ASTC. No, wrong stock. Sorry. Etsy. Nice grinder right here. Nice grinder. Hood. Oh, this morning it wasn't this extended. That's pretty extended. I would probably just want to day trade this off of the VWAP right here. Matter of fact, I'm going to set an alert like that on a pullback. Okay. Only for a day trade. Otherwise, a little overextended. Yeah, that's what I just said, Cyrus. In and out, exactly. SYM. Again, Matt, look at this. We have a nice A-line. And it just crossed through the VWAP, Matt. See this SYM? Yeah, I like this SYM. I like this. Really do like this. The dog, not overextended, looking pretty good. Let me set an alert at the VWAP here. Out to 3 times, okay. D-Dog, that's D-Dog already. And Zeta. Same thing. Look at this, Matt. Coming back up. Nowhere near this area right here. Pretty cheap stock, too. I like this stock. Gotta say, I'm giving you some really good stocks. But the point I'm making here is that if you look right now, with the SPY crossing above the 8-day EMA to the upside and a nice little angle. You look at the A-line scanner. I'll just quickly take let's just take a quick minute to look. Hand W. Very nice, right there. BRSN, reasonable okay one right there. LDOS, another one right there. Short ones. Right there, APH. APH. Is that a question for me, iPhone? Why can't we get the Thinkorswim to scanner to mimic the stock fetcher? Of course you can. Why would you think you couldn't? Almost ready, GL. Only if it trades above this area right here. See how we're still touching this? Needs to trade above here. That's it. Yeah, it should be able to, Matt, make a note to take a look at the A-line scanner and in the Thinkorswim and maybe make it more subject to these rules right here, okay? Do you hear me okay?
Yeah, I'm reading your...
They're saying that, yeah, but most of them are not good. See, you may only get 3 in Thinkorswim, but they may be better. I don't know how Matt coded it, but you should be able to get Ds all the time. Yeah, but here's the thing. I give you guys the stock fetcher code with A-line now. I mean, it's sold as lifetime, so just use the stock fetcher. I mean, it's easy. That's what I do. Okay. All right. So let's talk a little bit about the new features that we added to Data Miner, right? So I want to show you where I got these from. So let me show you how it all came together. Okay. Do you see right here? 20-week. These are my bread and butter scanners. Okay, these are my bread and butter scanners. If you see me ever work in the morning, I rely on these scanners right here, right there. These are my scanners right here. Okay, I want you to see something here. Chris, stay on topic. Chris, let's stay on topic. I'm showing you something interesting. These are the scanners that I've been relying on for over 20 years now. God knows I haven't changed these in over 20 years. Look at the rules. New 20-week high. ADX. I don't know if... it doesn't really matter that it's 14. Between 20 and 40. Average daily volume on the stock over 300,000. Price of the stock. The ATR of the stock. See these rules that I use every single day? And you see these rules right here. 8-day EMA, ATR times 10. These rules right here to make sure we're not overextended. And then assuming all that is true, then I go and I pick an option for you, right, manually. And then I had to go to Data Miner to see if seasonality's there, right? That's all those. So I had to find the stock. I had to make sure the stock fits these criterias. I needed to then make sure the stock is not overextended. And assuming all of those things were true, then I would need to find an option and make sure the option has a tight spread. Right? Just for one, that's just for directional trades. Now, Matt, can you take over the screen and show them in details the new data miner? Go ahead. But first, I wanted you guys to see what I just showed you. And again, keep in mind, I use these every day. They're in my TC2000 scanner, and they're in my stock. As you just saw, that is my stock vector scanner. Now I want to see if any of this looks familiar to you. 50-day high, low, 90-day high, low, 20-week high, low, 30-day average volume, ADX, options. Is ADX over 20, high, low? Does this remind you of anything right here? Does that look remotely familiar to you?
Yep.
Who uses these tools religiously, literally religiously every single day? Who uses these tools every single day? I didn't put a whole bunch of crap in here for you. I just put in things that you actually need. Now you can combine all the stuff that I have here with seasonality. And Matt, does it have the whether it's overextended over the 1.5?
Well, it will if you go to try to get an option.
I know. Can you try to get an option?
Sure.
Now look how it works. Verify stock is not overextended. Find options 4 weeks out, delta target, and profit target. But boom, right there. Upper target, low profit target, high profit target, where we are right now, all of that with the selected option. Here's the thing. After we release it, a lot of you will have ideas. I know a lot of you have a lot of ideas. Once you write that idea, I'm going to send it right to the developer. So all of your ideas will be heard. Last time your ideas yielded some really good features. So we'll have that again. But giving them to me now is completely useless. So don't even try. So do you guys see how what I just showed you is priced in here completely? How it's all in there and how I use it literally every single day? Okay, very, very, very important. Very, very, very important. What are you doing right now, Matt? Can you explain to us as you're showing us this?
Yeah, I was just making sure it was working. A couple features we've added in this version from the old one with their feedback. One of them is the number of trades is now on there too. You don't have to go to the spreadsheet, so you can evaluate. Like, oh well, this one has 24 trades in the back test, so that's a little more statistically significant. The other thing that it's done is the top 10 list is now clickable, which a lot of people asked about.
Very cool.
Oh, right in the main dashboard, right?
We literally, folks, I want you to understand, we literally went from version 1.0 to version 10.0 in like 4 days. Now, Matt, can you show yet any of the other stuff in terms of the spreads or the sooner than you think, Alan? Sometimes in the next couple of days. Have they done the season? Have they done the? Can you show us the correlation and or the time spread yet?
No.
Okay. All right. That's what they're putting in right now. So right away, you'll be able to see whether the stock qualifies not just under seasonality, but under all the shenanigans that I like to put it through. Like if the ADX is strong, the options give you the upper 8-day, whether it's overextended, so you don't get into any trouble. But let me show you what else this is going to do. John says, what are 24 trades, 13 trades? That's how many, can you explain it to him? I mean, I can explain it to them. It's basically how many trades were used in our back test. How many years we go back. Does that make sense? How many years we go back. That's what this is. Because certain stocks like, what's that one stock we have that goes back like 38 years or something? What's the max we go on our earnings, on our seasonality, Matt?
1990.
1990, yeah. So it just depends how far back it goes to 1990. You use that for seasonality. That's all in the, that's you're asking me questions, Michael, that are all related to the version that has already come out 3 years ago. I'm trying to teach people about all the stuff that we just added to the new version. Okay, so remember, so let me just explain to you, and they're actually they're putting it into it right now as we speak. So let me explain to you what's coming in here right now. Okay, and I'm gonna have a class on this in about 15 minutes. And we sold out yesterday 100 spots, Raleigh, in about 10 minutes?
Yeah, it was very fast. I dropped the link, and the next thing you knew, they were virtually gone. Well, they were all sold out. Yeah.
Right. So folks, I'm going to take over the screen real quick, Matt. Okay.
Yep.
So I'm going to go ahead and undo the screen, and I want to show you guys need. Arthur, this is not a customer service room. Please contact customer. Anytime I say I need help, you're in the wrong place. I can't help you. Raleigh can't help you. I'm giving a class with 650 people. You need to contact customer support. Thank you. All right. So I want to explain to you the two. Now that's what you just saw. What you just saw is just the first module. There are two more modules that you are not seeing. What the second module does or will do is it will give you a window, okay? And you'll be able to add 2 ticker symbols to that window. And it's going to give you the statistical correlation. And when I say this is all coming out, I don't mean like next month. I mean like in the next 24, 48 hours kind of thing, okay? So listen to this. So you know how I always tell you, you guys are way too overcorrelated. You guys are way overcorrelated. You buy a stock. Here, let me just pull up here. Buy a stock, pull up 2 stocks. So for example, I'm going to give you a really stupid example. Okay. So look at Citibank and look at Wells Fargo. This is Wells Fargo on a daily chart. This is Citibank on a daily chart. This is Wells Fargo on a 5-minute chart. This is Citibank on a 5-minute chart. Do you see any difference? Let me see if I could put these side to side.
Very similar. Yeah.
Oh, I would say they have a correlation of about 90%.
Yeah.
Here, look at. I just want to show you something, okay? Do you see this? You see this? Would you agree that at 11 it started consolidating? This one started at 11, started consolidating. Would you agree with me that they move almost tick for tick? Okay. Well, believe it or not, but a lot of stocks that are not obviously related like this. And folks, I'm not giving you a sales webinar right now. I'm actually teaching you something. So please open those ears and listen and write stuff down. You will find that a lot of stocks that you don't think do this actually do this. That they correlate like this. They correlate like this. In other words, they're extremely related to each other. You will find that chip stocks, for example, like, for example, NVIDIA, AMD. Look at price action during the last. This is 5-minute charts I'm showing you. The only thing they do different is one opens up, one opens down, and then they do the same thing the rest of the day. They're highly correlated. Okay. Yes, Cyrus, they're extremely similar. The reason I showed it is because they're very similar. And just like SMH, like, look at SMH. That's SMH, right? Now, look at Micron. That's a stock in the SMH. So, but unless you've been doing this for 31 years or you sit next to me, a lot of you, and when I say a lot of you, I mean the Richards, the Omars, even everybody, everybody, we're all guilty of buying stocks without knowing how correlated they are. Anything over 0.66 is highly correlated. Second module is going to have, and I'm going to show you with slides of what it's going to look like. I'm going to show them to you in just a few minutes. You're going to have a box, okay? Check this out, Raleigh, a box. In the box, you're going to be able to put in 2 ticker symbols. And a time you can adjust any time frame you want. Now, this is the time where you start writing things down again. I like to use 3 months. I like to use 3-month correlation. I'll give you a choice of using a much longer time frame, much shorter time frame. I like 3-month correlation, 90-day correlation. 90 days really tells you if a stock is correlated. If you think the stock just recently started correlating with your stock, then you can use a 3-month. And I'll have a lesson. I'll give you a lesson on this. The stock, it's going to, you press enter. You put in 2 ticker symbols. You press enter. iPhone's asking, how does correlation affect the trade? Well, if you have 2 stocks that are correlated substantially, iPhone, it's like buying 200 shares instead of buying 100 shares. You think you have 100 shares of each stock, but you really have 200 shares of one stock. Your gains will be twice as big. Yay! And your losers will be twice as big.
Right.
Boo. That's the it's called a double-edged sword.
So
you don't want to be in
it,
that
it
boat.
doesn't affect the trade. It affects the selection.
It affects your portfolio.
Yeah.
Because remember, last time I checked, you're not trading individual trades. You're trading your account. Okay? At least you should be. Okay. Look, you asked the question. I wanted to give you an answer. So there's a huge danger. A lot of stocks, the stocks in the S&P 500 are like children within the ocean. Okay? And they are highly, highly correlated with each other. Some less than others. Biotechs, they do their own thing. They do. They do. They do their own thing. You can trade usually a biotech and any other stock without really worrying about correlation. David Cocking is asking, how do we use correlation? You need correlation to see that you don't get into stocks that mimic your other stocks. Mm-hmm. Here's what a beginner does. Hey, I'm going to buy this stock. It's making a 52-week high. Hey, I'm going to buy another stock. It's making a 52-week high. Oh, look at this one. Oh, I'm going to buy these 3 hot stocks. Roger, can you look at my stocks? Yes, you have 3 tech stocks. Your correlation is about 95%. Congratulations, you have a triple leveraged QQQ. Mazel tov. Your drawdown is now going to be, and now when you lose, you're not going to know why you lost on all 3 stocks. But when you make money, you're going to think you're a hero because you're so smart because you made money on all 3 stocks, but you're really trading 1 stock. You think you're trading 3 stocks, but you're really only trading 1 stock. But you're trading 300 shares of that stock instead of 100 shares. What my tool will do will help you to not do that. Because what my tool will do will allow you to put 2 ticker symbols in, and it'll give you a number between 0 and 1 and 1. And if it says more than 0.66, timeout mode for one of your stocks. You see how easy that is? Mm-hmm. But unless you have a tool like that, you're going to be doing this. Should I buy or should I not buy? That is the question. Instead of having a mathematical tool to tell you how easy it is. Now, wouldn't it be cool if you had a nice little tool that had a window and you'd be able to put in any ticker symbol you want and they would say within an instant if it's above a certain level or not? Don't talk about your tool.
That's a bad joke.
Okay. So do you guys understand wouldn't it be nice? So now that you know that a huge amount of the stocks that you're trading are correlated. But Roger, I'm sneaky. I'm smarter than you think. I trade software and then I trade chip stocks and then I trade a cybersecurity company. Yeah, you're trading 3 correlated stocks.
Yeah.
So you see what I mean? You think you're cheating correlation, but you're not. And my tool is going to expose it and give it to you in an objective way. And you need to have that. You need to see how correlated you are. And after it's done, we're going to have a little session, and I'm going to say, you're really correlated here. So this tool will prevent you from getting into trouble. That's going to be part 2. And then what I'm going to try to do, and I think we'll be able to do it with Matt's help, is we're going to try to put our whole portfolio in there and see how the whole portfolio is correlated to the S&P 500. Don't you think we can do that, Matt? It's going to, I know, it's going to be by market cap. We're going to have to do it by market cap. We'll figure it out. We'll get it to a point where it's accurate. But again, see the computer guy that's doing this, he just puts stuff in. Matt and I give them the rules, so we have to make sure we got the rules right.
Right.
So that's part 2. Not will be awesome. Yes, Kathy Woods' problem. We don't want to be like Kathy Woods. Remember the story I told you about Kathy Woods and how I figured out she was a fraud? Do you guys remember? So the purpose of this tool is to make sure you don't pretend to be Kathy Woods. So let me explain to you what Kathy Woods. While Kathy Woods was making money in her fund, before COVID, before the crash, I looked at her Sharpe ratio. And when I looked at her Sharpe ratio, I saw that her drawdowns were equal to size of her upside. And then I looked at her portfolio and I realized she was basically holding a bunch of tech stocks. So what happened was when the market would go up, she would look like she was brilliant. And when the market went down, she would look like a moron. And if you looked at the triple leveraged QQQ and her assets, they were correlated like this. They were literally moving together together without, like, she had like 95% correlation. Matt, can you do me a favor?
Yep.
So I told you guys before the crash, make sure you do not trade in Kathy Wood stock because she is just correlating technology and leveraging the hell out of technology. You don't need her for that. You could do that yourself. A lot of people listened to me. A lot of people didn't listen to me. And when the crash came, she lost. When the small cap crash came, she lost 2/3 of her portfolio, where most investors lost 1/3 of their portfolio in their funds. Worse off, if you would have had the QQQ, you'd be able to recover because the QQQ is weighted that way. But Kathy, she's still underwater quite a bit. It's going to take a long time for her to recover if she doesn't go belly up. So what this tool will do is it'll literally show you, hey, you're over 6.66 or you're less than 0.66. If these two stocks are less than 0.66, mazel tov. You can go ahead and correlate them. Correlate them all you want. They're okay to put in your portfolio. And once you see this, I promise there'll be about 50% of the stocks that you think are not correlated are correlated. So it's going to do a great job of keeping you out of trouble. And when I say this is really important, I would say it's probably the second most important tool you have, because otherwise you're going to be twice as leveraged without even knowing it, and that's dangerous, my friends. Now, what's the third tool that I'm going to put in there? And that he already has all the information for that. Now, folks, this is where you start doing the chuka 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 dance. This tool is going to be the tool that's going to make me do time spreads without having to check a gazillion things. The data that we are loading in here for time spreads is data that Matt and I had to generate ourselves because we weren't able to buy it, because the people that sell it, they want $2,000 per month for this information. Let me explain to you what this information has. Every Monday morning during earnings season, Uncle Roger gives you an a Word doc, and that Google Doc, and that Google Doc shows you a percentage next to a stock that has earnings this week. NVIDIA 10%, Microsoft 5%. That's the expected move as priced into the option. Then let's say earnings, I'm making this up. This is all pretend. So let's say Microsoft comes out on earnings on Wednesday and you want to buy, okay, the Microsoft call, like a lot of degenerates do before earnings. We don't do that here. What we do is we measure how many times in the last 40 earnings dates, 40 earnings dates, the stock's implied move that was implied in that price, the 10% that I give you, and how many times that move came in 7% versus 10%. And you'll after it's done, you'll be able to see it with your own eyes. And every time some degenerate guru gives you an earnings play, you'll be able to go to him and say, you know, your advice would not have worked the last 8 out of 10 times. Wouldn't you love to do that? You're going to have the power to do that. No, the guru won't, but you will. You know why? Because that information is really valuable to have. Let me explain. So let's say we find that I'm making this up to illustrate a point. Let's say the last 40 earnings dates, We expected Microsoft to move 10%. Obviously, we didn't. Each time would be different. But let's just say it's 10%. And let's say that out of the last 40 times, the last 30 times, it came in 7%, not 10. Well, it would mean two things. It would mean if you would have bought an option before earnings, like a lot of gurus do, their earnings plays, you would have lost money 7 out of every 10 times. But what it also means is we have an opportunity for a time spread. And this is how you trade earnings. Two things need to happen. The number of times. Now imagine doing all this manually. The number of times the expected move was bigger than the actual move has to be at least 60%. Conversely, and consecutively, and concurrently, the implied volatility on the add the money option expiring this week, earnings week, has to be at least 50% higher than the implied volatility on the option that expires next week. So, would you like to have a little homework assignment and do this manually? Would you like to do this manually? Would you like to go back in history and tell me in the last 10 years how many times IBM's... So here's my question to you. No. I got a better question to you. How would you find out what the implied volatility was on IBM for the last 40 quarters? How would you do that? And more importantly, how would you know how many times the actual move beat the expected move? How would you know that? I just did, John. So think about what we're trying to calculate here. How many times, at least 20, how many times the actual move on the stock beats the expected move on the earnings? What percentage of the time? And then, at the same time, assuming it's over 60% failure rate, we want the option this week to be 50% more expensive than next week's. Now, try doing that manually. I'm putting that into data miner, both of those things. Wow. And we already have the first equation. Matt was able to make it. We made that equation. Glenn, we did that. We pulled that rabbit out of our you-know-what. We did that. You know why? Because those are the two things that I need to do time spreads. Now, the question you should be asking yourself is, well, I'm glad you're getting all this information, Roger. But what's in it for me? Well, how many of you guys are in the pit, and what's your success rate with time spreads? I want the people here to tell you. How have you guys been doing with these time spreads that I've been giving you? Those are the only two things that I need for a time spread. John says good. Okay. Anybody else? Good when I get filled. Have been making a profit. That's 3 people. I mean, don't all speak at once. We only have 1,600 people in that room. Winner. Why does the poor rabbit? Okay, I got you. Or you're right, iPhone. He doesn't. 90% plus win rate. Steve wrote just now.
Haven't lost yet. Yep.
Haven't lost yet. So for anybody that's asking what's in it for me, that's what's in it for you. 90% win rate, 85% win rate. What do you understand why I'm getting excited? And the only two pieces of information I need to make a time spread is how many times over the last God knows how many quarters we failed to beat that expected move. And I want to make sure the option this week expiration is 50% more expensive than this. That's all I need. That's all I need. Just those two things. Can you get them for me? That's all I need. Just those two things. Good luck getting them. Data miner. I can't find that data anywhere else. So, now, with that said, now that I've got your attention, now do you see why that information... So, folks, let me ask you a question. Now that you'll be able to have that data, are you going to be asking me whether I should do a time spread, or are you going to be knocking them out? Cyrus says, unless I'm 100% sure, can't wait for more, will it tell me when to close a time spread? No, it won't. Uh, I'll tell you when to close a time spread. So, without further ado, here. Oh, I love this. Yeah, Raleigh, can you just get me those two pieces of information for 500 stock for all the stocks that are coming out with earnings this week?
Sure, you got a month?
Yeah, sure, sure, Roger. Yeah. You mean you just need to know how many times in the last 10 years it didn't beat the implied volatility? And sure, yeah, that information is yeah. Bloomberg has that information on first page. Yeah. Oh, bar chart. Yeah. Good luck with that. No, you can't get that information. You could get that information anywhere else. There would be no need for me to come up with that information. And I don't like to come out with things that you can get anywhere else. All right, so folks, pay attention. A lot of folks were not here on were not here yesterday. It was Sunday. I'm going to show you some cool stuff, and I'm also going to show you some graphs. So please pay attention. Please pay attention. Listen, this is going to be really, really good. We had a record day yesterday. We sold those 100 spots very, very fast, and I have a feeling we're going to repeat that again today. Please pay attention. I'm also going to be giving you a lot of dates. Please write these dates down. These are actual seasonality dates. Okay? Profits performance shown are not typical. You may lose money. Trading data mining is a software. It's a web-based software, which means if you have access to the internet, you'll be able to access data miner. You will have losers. You'll have winners. I don't know what you will decide to do with data miner, but my promise to you is to give you the most amazing tool and show you exactly how we use it. Okay? And a time spread is a earnings play. Earnings play. Folks, there will be losers. There's no black box miracle system that prints out winning trades automatically. My name is Roger Scott. A few weeks ago, my team and I held a private meeting in Jacksonville. Thanks, Murray. I'm going to close the chat. Raleigh's got you guys covered. I'll come back after we're done. I don't want to be disrupted here. A few weeks ago, my team and I, we had a private meeting, flying people from United States, Norway, Germany. I held it close to the chest. I didn't tell you guys anything. I kept my mouth shut. And they asked me if you had a choice to put anything into data miner, if you had a way to create like the most amazing software without any technological limitations, what would you do? Take a piece of paper and write it down. And I did that. I actually wrote down exactly what I wanted. And I'm thinking to myself, yeah, it'll be another year till I hear back from them, right? You know how these tech guys go. Like, yeah. Thank you. We'll see you in a year, And that's not what happened. They actually came back to me at the end of the day with a model. So, folks, we're talking about unleashing automated trading software that isolates the best days to take stock trades and option trades based on 3 decades of data. Plus, giving you the exact option to take, assuming the stock is not overextended. That's programmed in here too. You're welcome. And gives you a profit target. Now, in a moment, I'm going to reveal everything behind this new software and all of their cool features. And wait till you see this. You're going to love this. Plus, I'm going to share the #1 stock for October that I think will double. And you're going to want to stick around for that. Don't go anywhere. You guys are going to love this. In fact, I've got a major surprise coming to you guys here in just a few minutes. And yes, the S&P is going down, and it's probably going to completely fill the gap as we expected 5 hours ago. But first, let me show you how it works. This is how it all started. The data miner started with this sheet right here right around Valentine's Day. Remember that, Matt? We made a seasonality sheet for ourselves to see how these things will go. And anytime you see a green window, it means there's strong seasonality. Anytime you see a red window, it means there's weak seasonality, which can be very useful too. We call these periods windows. But this was the first version of data miner. Now, what you're looking at is the exact return each day of the year for Netflix over the last 2 decades. Now, at first glance, it looks like a lot of data to process. But by skimming for big green wealth windows like you see right there, we can isolate the most bullish dates to buy Netflix each and every year. And if you're on the YouTube channel, please, please, please make your way into the Zoom room, because that's where we're going to cut off the YouTube channel, and you need to be in the Zoom room, folks. Please take a minute or two and do that. Only if you are in the YouTube. If you're Zoom room, you have nothing to worry about. So you see these dates, for example, write this down. January 21st,